Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And guys, inflation came in today, the CPI, and it came in lower than expected. We was expecting 7.3, we got 7.1% guys, and I mentioned in yesterday's video, just watch the expectation. If it comes higher than expected, we may get a bearish reaction. If it comes lower than expected, we get that bullish reaction. And you can see here in the pre-market, the S&P 500 gave us this amazing gap up, and it hit around 413.93, few cents off of my 414 level. And it was crazy, that big jump. However, the fun definitely started when the market opened, and I can't wait to talk to you guys about it. Today, I'm gonna tell you briefly how I traded today and what the plan is for tomorrow. We got FOMC tomorrow. Let's go. So as I said, guys, the party is not over yet. FOMC is tomorrow. We will see if the feds will keep their word, or I don't know if they gave us the word, but will they give us that 0.5 rate hike? Okay, because usually lately they've been giving us that 0.75. So if they come in with that 0.5, that would be showing that they're become a little less aggressive. Okay, and with inflation coming in a little lower, would that be enough to justify them being a little less aggressive on the interest rate? We are going to find out tomorrow at 2 p.m. Now, usually the reaction at 2 p.m. is usually the fake one, and then Powell comes in and speak. We call him MC Powell. He comes in and speak around 2:30. That's usually when we get the real reaction from the FOMC announcement. So that's definitely keep that in mind, guys. If they come with that 0.5 interest rate hike, we may get a bullish reaction. If they continue with the 0.75, we may get a bearish reaction. Okay, but best thing I can say as a sheep trader, the price action is the shepherd. Okay, I'm Uncle Charles, aka Uncle Ram, and I'm saying follow the shepherd, the price action. Okay, because it worked extremely well today. Now looking at this 15-minute chart, guys, as usual, no matter where the price opens, we got to identify the first support level, the first resistance level, as I say in every video. And I got right here, I got first resistance at 411.5 to 412 zone. Long if 412 clears, and I got upper targets. First support is at 410. Short if it fails with, then I got lower targets, okay? And look at that. Beautiful. This yellow line is the 410 level, and it broke it down, guys. And look at that, continued dropping as low as 399. Holy moly, all morning, just one trend to the downside, one directional move to the downside, and then around afternoon, that's when it started chopping a bit. Okay, it was an amazing trading day. All we needed was one trade setup and just ride that winner down. Okay, I took profits at each level. Okay, and left runners. It was, I will even say it was a very easy trading day. These trend days are very easy to trade. Those chop days are a little more challenging, right? Okay, so we're looking at the daily chart. Here are some things that we must note. Okay, it opened around 410ish, broke it down, took out that multi-year trend, multi-month trend line from January high. That was around 407.5ish. Then we got the trend line from October low. That was around 405ish. That didn't hold. And of course the 200-day moving average, which is around 402.5. Okay, and today SPY closed at 411.97, so it failed to recapture the 200-day moving average. Okay, it is an update from yesterday though. Despite the crazy price action today, it was an update. So to be bullish, bull case scenario, clear that 200-day moving average at 402.5. That will be resistant. If we can clear that tomorrow, use the 15 to 30 minute chart to confirm if it clears. That's what I would do. That will put 405 to 405.7 zone in play based off of this trend line. Okay, and then the multi-month trend line is around 407. Okay, breakout of that is around 407.2ish. And of course, that 410 to 410.5 is zone, all right? Potential double top here. Potential double top. But the bull case scenario comes back in place starting with a clearing of the 200-day moving average, all right? Now, the bear case scenario, if it can keep this momentum up, stay below the 200-day moving average, right? Take out that 200 support level. That 400 support level. I also have support at 398.5. I'll probably swing puts if that level fails. 395.7-ish, 393.5-ish. And then we could possibly get a test all the way down to 390. Okay? So the bear case scenario starts with the loss of 400 and definitely that 398.5 level. Like I said, I would swing puts if that level fail. All right, play it level to level. All right, I gave you guys my levels. If you are gonna swing, I would, like I said, my style is this. Whatever my initial size is, I would play it level to level. Take most profits at the next level. Leave a runner. I would swing the runner. All right. So you guys got my levels for SPY. You guys got my plan for FOMC tomorrow. It's at 2 p.m. Watch out for the fake out. False breakouts and false breakdown setups will be your best friend. Just keep that in the back of your mind. All right. And because I love you guys so much, check this out. I got a room where I post all my levels for SPY. Do me a favor. Screenshot this. Okay. You guys are looking at my support levels and resistance levels for some ETFs that I like to trade. Screenshot this. Add these levels to your chart. All right. Follow the price action. Let the levels guide you. Okay. Bah. Moving on to triple Q. Big red day for triple Q. I do got this. I forgot what it's called, guys. But yeah, this this low pattern right here. My brain is not working. Can you guys comment below what this this pattern is called? Where it just winds up. Megaphone. Holy moly. Megaphone pattern. Wow. So yeah, the big level right here that we need to talk about is at 290.7. Okay, now, and also 294.34. All right, this was alerted in the group as well for triple Q. I'll turn bearish if 294.34 fail with price targets below. Look at that. It opened around 296.65, took out that 294.34 level, and it just dropped for the rest of the day, okay? So first resistance is 290.7. Bull case for that, for triple Q, is if we recapture that level. If we clear 290.7 to put 294.3-ish and then 297.5-ish back in play, okay? As long as we're below 290.7, stay bearish. Next support is at 287.7-ish. If it fails, we have 285.6-ish, 284.88. Give it a zone, okay? Support there. Look to short if that fails with 281 and then 278.3-ish in play. That's the support of the megaphone pattern. Below that, it's a breakdown megaphone pattern. I'll definitely swing puts if that fails, all right? So yeah, bullish above 290.7, stay bearish below 290.7. Watch for the next breakout or breakdown of support, okay? Dow Jones, very nice trade with Dow Jones as well. It opened around 348. It had a support around 346, broke down 346 and just dropped as low as 340 for the rest of the day, okay? That's a nice $6 move. We didn't have to catch the tippy top, all right? So yeah, as long as below 343, stay bearish. Watch if it can break down the support at 340 to trigger more downside. 336 is the next critical support. If 336 fail, I would swing puts, okay? Bull case scenario, it needs to recapture 343 to put 346, 348 point, 348 and then 351 above that, okay? So look for calls above 343. As long as below, stay bearish. Look for a breakdown 344 to enter your next put position. All right, and Tesla, holy moly, holy moly. Okay, so you guys know about my 172-ish level already. I talked about that in yesterday's video. Okay, it opened around 174.87, broke down 172 intraday support, and look at that, dropped as low as 156.9. What a trade, what a trade. Shout out to my Discord members who traded this. Shout out to Arsham, and man, this is just an incredible. All I can say is right now, critical resistance at 166. Stay bearish as long as below 166. Bull case scenario, 166 is recaptured, 166.5. All right. Then I would, that would trigger some calls for me with upside targets at 169, 172, 175, and 177.5 ish. Okay. Stay bearish as long as below 166 though. Next critical support is at 159 and as well as 157. All right. Look for puts if those levels fail with more downside target. I think I got one at 155.5 ish, 151, 144.5 ish. There is a gap as low as 137.5. Holy moly. Can Tesla finally fill that gap? We'll find out soon. Apple. Look at Apple gapped up as well. No coincidence where it gapped up. Okay, I got fib levels from January 3rd down a high down to June 15 low. Okay, it gapped all the way up to the 38.2 fib level around 149.6s, and from there it just dropped. So resistant right now is at 147. Bull case scenario, that level must recapture to put 149.6 and 152.5 in play. Okay, as long as it's below 147, stay bearish. Watch that 143.5 support level. If that fails, 141.7 is, then 139 and lower price targets are in play. Okay, let's look at these inverses. DXY, all right, finally broke down that critical 148.3-ish level. Okay, so DXY is showing some bearish signs. Okay, stay bearish on DXY as long as below 104.3-ish. If you want to get bullish on this level must recapture, give us that false breakdown setup to put 105.3-ish, 105.7-ish, and then 106.5 back in play. Okay, VIX, look at that. Look, the orange line is 50-day moving average. Tested that, touched it, and then hot stove rejection all the way down. So immediate resistance right now is once again 22.5 to 22.7 zone. As long as below, stay bearish on the VIX. Okay, if it wants to be bullish, recapture 22.7 and clear 23.7 to trigger more upside back up to 25 and maybe retest that 50-day moving average. All right, as long as below 22.7, the next critical support for VIX is 20.4. All right, so VIX is dropping. Interesting. So yeah, let's end this with the option flow. Filter for 500K premiums or above, 55% overall into puts. Okay, now what sticks out to me is this one right here. 900,000 over 900K sweep orders, over 10,000 in size. They entered calls around the 400.4 mark. 435 strike price January 20. They got time. In my opinion, this is pretty aggressive. I do wonder what this person is thinking. Did they get the FOMC release before we did? I don't know, but yeah, that's just something to keep in mind right there. That's what big money, or at least one of the big money players, are doing. QQQ, overall 56% into calls though. If we take a look at these, yeah, this one's pretty in the money calls. All right, in the money. So a lot of these calls, yeah, they are in the money. So I wouldn't say they're the most aggressive ones. This one's interesting. Over 500K in premium, over 6,000 in size. They got a 255 strike price, January 20, 2023. Very interesting. This one's a split order, 290 strike price. So yeah, so these bullish bets, they're in the money. So to me, they're not that aggressive. Dow Jones, nothing. Tesla, what you got for us? 64% into puts for Tesla. Let's see here. A lot of these puts, yeah, they're out the money puts. Not big sizes, though. Let me check the above the ask. Yeah, let me see what above the ask. Yeah, overall bearish for the above the ask, but the sizes are not that big. So they don't really fit my criteria of what aggressive plays are. All right, Apple. Oh, that's above the ask. That's a bullish bet. 145. So that's an in the money call, but without the above the ask. Overall, 82% in the calls. DXY, nothing as usual. VIX. And VIX is 100% into puts. Split orders. All right. This one 21, a little out the money. Not that aggressive. This one's in the money. Yeah. All right, so I hope you guys enjoyed that. I hope you guys found value in the video. If you guys want more content from Uncle Charles, please consider joining my Discord. I got some holiday deals. Please use the coupon if you join. And I hope you guys were green and profitable today. All right, thank you guys. Peace.